Well, we've been talking about the triple top. We have had a breakout. Now, it must happen in a pervasive way, but my bet is that it will indeed, because triple tops are extraordinarily rare.
Take a peek into Lynette Zhang's extraordinary world of finance, where she discovers a phenomenon that is so rare that it is like finding a hidden treasure. Brace yourself for a journey into the uncommon as she unravels the rarity of this occurrence and places her bet on its pervasive impact. Join us in exploring the mystique of this financial anomaly. Now let's hear what Lynette Zhang has to say about her predictions.
So I'm going to get right to it because I've been watching this bubble build, as maybe many of you have, in the private credit markets. I mean, we remember after 2008, banks pulled back from certain types of direct lending, but just because they pull back from that does not mean that they're not lending to corporations or to companies that invest in private credit or that make up the private credit pool. In fact, many have been warning that there is a bubble forming in this area. Private credit market has roughly tripled in size just since 2015. That's significant. Of course it has. As the banks pull back in certain areas, well, what you have is you have others that will step in. And in fact, now you've got private credit is so popular with pensions and institutional investors. You know, you may be attached to private credit and not even realize it. Private credit has become an increasingly sought after funding tool for buyout firms, and banks have pulled back amid a spike in interest rates and a drop in investor risk appetite. Some banks are concerned about this shift is underwriting these types of loans and then selling them to other investors. We're going to be talking about both of that, is a strong source of revenue for them. So underwriting, maybe they're not doing the direct lending, but they are underwriting them, and that puts them at some level of risk because then they're packaging them up and then they are transferring that risk to you, the investor that doesn't really know what they're doing. So even though it may not be direct, you need to understand that the whole system is incestuously interconnected. And so when a bubble pops in one area, it's going to be felt by all areas. How much they can hide is anybody's guess. But this is a very strong source of revenue for them. They're not going away. They may have pulled back in this area, but they've raised it in other areas. There is clearly an asset bubble going on in private credit. There are many other asset bubbles building. What it needs is just one thing to trigger a fiduciary crisis. So a crisis that they cannot hide. How quickly can that contagion spread between the incestuous interconnection and in the digital age? I fear we are about to find out, because this is the growth. Global private credit debt assets under management. So what we're talking about here is more debt to fund debt. You cannot fix a too much debt problem with even more debt, but they don't have any other solution for it. And once things get in place, then they are ready. They're off to the races, as we can see here. Now, what I want you to realize is that there's this black area is unused capital. So if an emergency crops up or an opportunity crops up, this is where they're going to pull cash from. But look at how much faster the debt, that blue area, and that's just the market value of the current portfolio. Again, all of this could be hiding a tremendous amount of risk. It's like the tip of an iceberg that we can't see until the ship has run aground. Then you see it. So U.S. speculative debt due for refinancing. This is that debt wall, that refinancing wall that we've been speaking about. So much of this debt was taken out. Look at from 2010 We were already in ZIRP, zero interest rate policy. That only changed here. So all of this accumulated debt has to roll over. This is what that looks like. From near zero to speculative debt requires higher interest rates. I mean, are they going to be able to do it? Who's buying all of this debt, right? And could an implosion in these markets trigger the next financial crisis? I mean, there are so many bubbles that are popping right now because of the increased interest rates. Who knows what's going to trigger it? There will not be a soft landing. You can mark my words on that, puppy. This is not going to be soft. This is going to be harder than any landing that you and I have experienced in our lifetime, because this is bigger than anything we have experienced in our lifetime. This is the end of this debt-based paper system going into maybe a debt-based, maybe a purchase-based surveillance system. How do you fight it? Yeah, get out of the system. Real money that has massive market, the most liquid asset that you can do because it's used in every sector of the global economy. Definitely. An accident waiting to happen. I just can't tell you the exact moment. And in the meantime, what's happening with spot gold, which is just a contract? Well, we've been talking about the triple top. We have had a breakout. Now, it must happen in a pervasive way, but my bet is that it will indeed, because triple tops are extraordinarily rare. When I first put this chart together last Friday, as I was working on it, we were testing and forming a quadruple top. Well, all that was over. And here is just a 1-year chart, and there are a few things that I want to show you on it. Number one, I want to show you this gap, right? Remember when I've explained these patterns, right? If you can understand the pattern, you don't have to fully understand it, but if you can see the pattern, then it gives you a clue. And what having a gap in a chart tells you is that at some point in the future, can't tell you when, but at some point in the future, so it could be this week, could be next week, it could be a month, that the spot price will go to fill that gap. So when you see spot gold pull back and go down, that's all it's doing is filling that gap. The fact that it's had a massive breakout, I mean, the high on this was 2152.30. Now that's where it was way up here. That's not where it closed, but it went up there. Isn't that interesting? That was a big breakout. It's like holding your hand on a spring. And when you remove your hand, the spring shoots in a direction. When it happens to the upside, like with spot gold, you can see it, bam, shoots right up, okay? So I want to be crystal clear on where we are on spot gold, because even with this, it does not reflect the true fundamental value of an ounce of gold, which is more nuanced. This is just Wall Street's version. They can create as much gold as they want to, paper gold, gold that does not nor ever will exist. But when you're looking at this, there's a finite amount, period, end of discussion. The physical only market broke out a long time ago, and the market that is only for the 1%ers is at all-time highs, all-time highs. This is not yet at all-time highs, and the premiums have come down. I'll show you that in a future episode. But make no mistake about what is happening in this spot gold market. There is your breakout. Look at how high that went. Be prepared. Could it come down and fill that gap? Well, at some point it's going to. So quite honestly, I'd rather that happen sooner than later, because then it's just out of the way and I don't have to think about it anymore. I can't tell you exactly when it's going to happen, but it will happen because it always does.
Thanks for staying connected with us. Remember that rare insights like the triple top are windows into unique opportunities. The breakout discussed today holds promise in its rarity, and staying informed is key. Thank you for joining us in unraveling this captivating discussion. For more thought-provoking analyses and insights, don't forget to subscribe and continue exploring the captivating world of finance with us. Thank you.